Good morning. Thank you for joining this online event, and thanks to everyone who will watch this event at a later date at a time of your convenience. I'm Michael Strain, Director of Economic Studies at the American Enterprise Institute, and I'm very happy to be having this event today on the state of the Israeli economy, challenges, and opportunities. Despite a war against Hamas militants that has engaged much of the country, Israel's economy has remained strong and its markets resilient. In the months following the start of the war, Israel has seen numerous developments, such as shifts in international economic relationships, adjustments to sector-specific policies, and changes in government spending levels. In November of 2023, Noach Hacker, Minister of Economic Affairs at the Embassy of Israel, joined me on AEI's stage to present and discuss on the state of the Israeli economy. And I'm very happy to welcome him back this morning to discuss the current challenges and opportunities that are facing Israel's economy and to discuss how Israel's economy has adapted, in my view, quite remarkably over the past few months. The run of show for this event is very straightforward. After my brief introduction, Minister Hacker will give a presentation, and then him and I will engage in a discussion. And I would be happy to present him with your questions during that time as well. You're welcome to submit those questions to my colleague, John Toohey. You can email those to him at john.toohey@aei.org. His email address is on the webpage for this event. You're also welcome to submit questions via X using the hashtag AskAEIEcon. That's hashtag AskAEIEcon. Noach Hacker is Minister for Economic Affairs at the Embassy of Israel. He was born in Jerusalem and received a bachelor's degree in social sciences and a master's degree specializing in international economic influence from the University of Haifa. In the past 5 years, Minister Hacker has served as director and vice president to one of the largest media companies in Israel. Before that, he held various positions in the Ministry of Finance, including deputy director of the Budgets Department. He led various reforms of the Israeli economy, orchestrating the construction of the Budgets Department and its approval in the government and Knesset, and oversaw various economic legislations in the government. I'm honored to have him here today, honored to have him back, and I'm very grateful for all that he is doing to support Israel during this crucial time in its history. Minister Hacker.
Thank you very much, Michael. It's an honor to be here again. Truly appreciate your support and you allowing Israel to talk a little bit about something that we're not talking about, the Israeli economy. There's a lot of conversation, a lot of media about what's happening in the war, and on the economy, it's a little less, and thank you for this opportunity. So if I may, we'll just share my presentation and start. So just before I start, because we're not in regular times, I would like to share an experience I had just a couple of weeks ago. We're now 290 days since October 7th, 290 days. Still 120 people, children, women, and men still in captivity after 290 days. A couple of weeks ago, I visited Israel, actually for the first time since October 7th. And I had the chance to go and visit one of the kibbutzim at the Gaza border, Kibbutz Nir Oz. Kibbutz Nir Oz was completely destroyed. There is, in every house, they tried to burn it, either kidnapped, murdered, horrible, horrible things done on October 7th. And the one taking me on the visit, her name was Idit. She's a single mom, and she spent October 7th in that kibbutz, in the safe room, with her 20-year-old daughter. For hours, they stayed in their safe rooms, trying to prevent terrorists from opening their safe room door. And she took me to visit all the houses in the kibbutz. I went to the Bivas family house. Bivas family, Kfir, 9-month-year-old baby, 9 months. Ariel, his brother, 4 years old, and the parents, Yarden and Shiri. I went to their homes. It was a very hard sight to see. And I went to Edith and I asked her, Edith, how are you doing this? How can you take me here to around the kibbutz? I can barely be here. And she said, Noach, we are strong. And with that message, I think that will help you understand what happened in the Israeli economy for the last couple of months. This is, of course, Kfir. Okay, so I'll try to explain a little bit about the Israeli economy through three main indicators. First of all, government expenses, which was a very big change for us since any other war we experienced. The labor market that experienced very unique shocks, again, that we have never experienced before. And foreign trade would also experience things that decades since we experienced them. So we'll start with government expenses. Government expenses for this war, 2023 to 2025, are expected to be at 250 billion shekels. For us, that's a huge amount, even the civilian expenditure, which is the cost of relocating communities from borders in the north or in the south to keep them safe from terrorist attacks, even that alone, 40 billion shekels is more than any war we have ever experienced, without touching the defense budget. Only the civilian costs are way more than what we've ever experienced in wars. So it's a very big change from what we are used to having in these kinds of situations. Another thing that happened immediately after October 7, it's the risk factor of the perception of risk on the Israeli economy. It started with the CDS premium, which jumped immediately jumped on October 7. But if we look today at Israel's bonds, the bonds that the Israeli government is issuing to the public in order to finance these huge costs, we see a jump in the interest. We see the spreads between us and the US government jumping from 0.7 before the war to now 1.6% nearly. So we're talking about a huge change in the perception of risk on the Israeli market. Another thing that we project will go with us at least to the medium term is the expenses, the preferences of the Israeli budget. If for years, for decades, we've tried to lower the defense costs as a percent of the GDP in order to free monies for education and health and social security, we see now that we have no choice but to raise defense expenditure back. We project near 6% of GDP, at least for the medium term. Also, the financial cost, because of the increase, it's not only the increase of interest in the world, but also our risk premium that increased and also the debt that we're taking will probably raise our financial costs for the medium term from 3.3% to nearly 4%. These things we'll need to address them immediately in order to keep our financial stability. So just before I conclude the expenditure part, I just have to show you how Israel has been preparing for this kind of extreme situations through the years. In the early 2000s, we've been in about 90% debt to GDP ratio. We have managed to bring that down to 60% in 2019. COVID made us take on a lot more debt, but as you see here, it took us a year and some to bring it back to 60%, which is, for me, it's amazing. And if you take a look at 2023, which were already started in the last quarter, we see that we finished that year only in 62% debt to GDP ratio, and we're estimated to finish this year, another year of war, at 67.5% debt to GDP, which is well below the OECD average of over 100%. Another couple of figures to let you know about how our financial strength keeps us very, very stable is our foreign exchange reserves, which stand on $211 billion. That's high in any comparison, about 42% of our GDP. And the current account balance in Israel is positive, about 3.5% GDP. So we were very stable and very strong, even now, after a year in the most costly war we have ever seen. As I said, 62% of debt GDP is low in comparison to UK, Canada, Spain, France, of course, the US, and other countries. Couple of words about the labor market. The labor market experienced also an immediate shock. I think we talked about it in November already, but in November we didn't know how much time it will take us to bounce back. So if we take a look, what happened immediately is the reserves. The reserves were called into the army to serve, and their spouses had to stay home with the kids because the school were closed for the first month. And we saw from that on, we saw the market coming back. That's part of the resilience I talked about, meeting Irit at Nir Oz. We're very strong. A couple of examples I can give you from my friends that spend their nights at reserves and their days at work, or half a week in reserves and half a week at work. So it's not something sustainable that we can continue in for years to come, but for this time of war, I think it shows the Israeli resilience and Israeli ability to bounce back quickly. Another thing to talk about, which is not exactly related to the war, but pre-war, one of our biggest challenges were to get the ultra-Orthodox community, especially men, to join the workforce. The problem with this specific community is that they teach their kids, especially boys, in a private system that doesn't require math learning, English learning. And what we have experienced since October 7 is an increase, a huge increase in ultra-Orthodox boys' schools that are applying to join the public system. And I think that can be a very, very big drive for the Israeli economy going forward. It's something that we have aspired to for many, many years. And now all the social effects of this horrible war has brought the new kind of optimism in this sector of ultra-Orthodox joining the workforce. Another thing that happened, I don't remember if we talked about it or not, or to what extent, is that another immediate reaction to the war is Palestinian workers that used to work in Israel now don't work in Israel. That mainly affected the construction sector and the agriculture sector in Israel. It still is affecting. But what has been done since then is the state of Israel have conducted and signed several agreements with different countries to bring in thousands of workers to replace the Palestinian workers. And another thing that happened is a lot of technology was entered this specific sectors in order to replace the lack of workers that we're experiencing since October 7th. Lastly, I'm going to talk about foreign trade. In foreign trade also, we have experienced things we have never seen before. I think the most unique thing is the Houthi attack on world trade. We're fighting this war not in one front. It's not only a war on Gaza. We're seeing the war, the fronts in Yemen, the Houthis, and the first thing they did is disrupt world trade in the Bab el-Mandeb Strait. And I think that's a very alarming thing to global trade, but the actual effect of this disruption to Israel is not that significant. Now we can say that alternative shipping routes are being used, and the actual effect of that on the Israeli economy is not that big. And it also made us understand the importance of the IMEC initiative, of the President Biden's IMEC initiative, which he announced a couple of years ago. And people didn't really realize the need for that initiative or the economics of that initiative. Now that we see that the Red Sea is not as safe as we have thought before, I think this initiative will go forward. We're even starting to see goods flow from India through this corridor, not on large scales, but we're starting to see this progress because the economics of it makes so much sense. Another thing that happened to us that we have met before, the state of Israel, is boycott. The boycott we're experiencing, for example, from Turkey, that openly says it's boycotting Israel. This is data from the Turkish Statistical Institute, shows that imports from Israel and export to Israel from Turkey have went almost to zero. That also, if we take a look about its effect on the Israeli economy, we see it's not that great. Israel's imports, the part of imports that is coming from Turkey to Israel, it's about 3% of our imports, and exports, it's about 2.5% of the imports. And we have a lot of replacements for those products. So we don't see that having a big effect on the Israeli economy. If any, we think that will have a negative effect on the Turkish economy more than the Israeli economy. But I think the trend of countries using global trade, free trade, to fight other Western economies, Western countries, it's a very negative trend that we, as the Western world, we should fight it and prevent it in the future. Another thing happening is the composition of our global trade. The composition is changing. We're importing more from the US, as I said, less from Turkey. And that happens also in our foreign investments. Our foreign investments also, the composition is changing. More from the US, more from Western economies, Western countries. And I think that's a big change in the last couple of years in the Israeli economy. You know, Israel is a country in need of many investments. And our driver, the high-tech sector, also needs a lot of investments. We see that also after the global trade, when the global trend took investments down, with the entrance coming high, we see the first quarter and the second quarter of 2024 actually a recovery. And we can say that the trends on the Israeli high-tech are even higher than the global positive trend to the last quarter. So we're very optimistic on that also. Just to summarize it for you, if you're coming very strong financially and you're very resilient like the Israeli economy, then what we see through the years, it's not only now, it's happened already also in COVID and other warlike incidents to Israel, is that we bounce back very fast. We have a very fast recovery for these kinds of incidents. So even when we had a very bad fourth quarter in 2023, we are already seeing a bounce back in 2024. With the first quarter, we had growth of almost 15%, during wartime. And I think that sends a very big and very strong message about our economy. We see that it's not only Israeli authorities that sees it like that. It's not only the Ministry of Finance and not only the Bank of Israel. Also, the IMF and the OECD predict that in 2024, during wartime, we'll finish in positive growth of about 1.5–2%. And in 2025, the bounce back will be even higher. The IMF talks about above 5% growth, or 4.6%, the OECD, which actually shows how fast the Israeli economy can recover. Just one last thing I want to talk about is US policies. In the last couple of years, US has changed their policy toward, it's called friendshoring or like-minded countries, a lot of different words for it. And we see it also in the economy. We see it where the US is building, let's say from the DPA, the Defense Production Act, starting to build the defense supply chain. Just last year, they added to that supply chain that included Canada already. They added the UK and Australia as domestic sources in order to include them in that supply chain group. We see it in the Inflation Reduction Act. and the energies in energy, where the US pointed out Canada and Mexico also as preferred countries that the US will work with. And we see it also in the CHIPS Act, when the US actually devoted hundreds of millions of dollars to improve supply chain facilities in other countries, actually investing in other countries in order to secure the US supply chain. And I think what I'm trying to say, what we're trying to say at this moment in time, when you see how strong we are, there's no better answer. There's no better answer and no more decisive answer to terror than including Israel in those groups and making sure that everybody knows that it's not only that Israel is strong, but to show the world that we are stronger together and we're come out of this war even stronger than we have ever been. So with that, I just want to conclude after showing that Israel's economy, really how innovation and resilience can drive growth and how together we can take the US economy and Israel's economy to new kinds of growth that we have never seen before. I want to thank you for your attention. Thank you, Michael, for the opportunity. And I look forward to any question you might have on this or on any other economic issue.
Thank you very much for that presentation. I think my first question, and we've talked about this before, but for the audience, I think I'd like to ask, in kind of a human sense, what explains Israel's resilience? How I think the resilience is surprising. And my sense from our conversations and from conversations with others is that Israel is really kind of pulling together in an all of society effort, very consciously, to support its economy, or at least that's one way of, I think, characterizing what's happening. Can you say more about that? What does that look like? What does that feel like? How does that specifically manifest itself?
So I can tell you that Israel has a different vibe. I know people are talking about it, and being an Israeli, it means that you're part of something great, you're part of a group. And I think we're seeing how people contribute in all sorts of different ways. We entered this war divided. There was a lot of issues that divided us internally in Israel, but the basic connection between us, between all the Israelis, emerged in a second, just in a second. And I think that's what pushed our economy even further, because when you see someone, and I'm not that young, and my friends in my age, we have kids and we have homes, and when you're called out to reserves and you're going with that kind of drive, and then after a day of reserves, you open your computer and continue working, I think that's something we have never experienced before. I think everybody understands just as much the security is the thing that allows the economy to evolve. The economy is the thing driving the security forces and funding the security forces. So we have to keep both of them very stable, very strong. And I think what we see from the Israeli public, we saw it in the ultra-Orthodox community. Look, that's a very big change. If we would have talked about it before October 7th, it was kind of impossible. Or people will tell you you're crazy. The ultra-Orthodox community wants to join the public system. Yeah, they want to join the public system. They want to better educate their boys, better educate in order for them to be more, to participate more in the job market in more productive ways than they have done till now. And I think that's something that's very important to us as a society, as well as an economy. And of course, we have our high-tech sector. Israel's high-tech sector is very, very resilient. It's highly connected to the US. It's mostly with US investors, with US companies, the relationships. And what we see actually is that high-tech sector is barely influenced by war. it's barely influenced because, again, we're a small country. The world is very big. The opportunities are very big, and we see the Israeli high tech driving us forward. But it's not only the high tech; it's all around, and I think that's a very good sign for us. Hopefully, it will take us to a lot more better places in the future.
Um, Tell me about the northern border. You mentioned that communities are being evacuated. How serious is that situation? How worried are you about any economic ramifications from what's happening in the north?
So I have to say that again, this is something we have never experienced before. Look, it's over 100,000 people evacuated from their homes with no date of return. I think that creates a very big influence on the northern economy, uh, factories in the north, or even small businesses. It's very hard to conduct small businesses when nobody knows where anybody is coming back home. And I think that's a very big challenge. What we're starting doing now is just like we established a government entity in the south to make sure those people that experienced this horrible attack are recovering. That's the same thing we're doing now with businesses and also just with all the population of the north. It's established, it's coming, it's going to get a lot of funds. You saw the projections, tens of billions of shekels it's going to take, but we're dedicated to it. We'll make sure the north will be even better than it was ever before. And I think that's our signal to the world. We're going to get out of this war stronger than we have ever been. And I think that's something to look forward to. And I hope we reach it as fast as we can.
I have a question from the audience that I'd like to ask you. The high tech sector has been a crucial driver of economic growth and often considered an economic shock absorber for Israel. How do you view the decline in investment in Israel influencing the high tech industry, and what effect does this have on the macroeconomic environment? What role can monetary policy play in stabilizing investor confidence? And I apologize, I don't know who asked that, but I'll try and find that out.
Okay. So, first of all, I don't know if you know that, but actually in Israel, we've experienced this year a decrease in interest. The central bank has already, for at least once, lowered interest in Israel. That's because we keep a low inflation. We have been staying underneath 3% for the objective of the central bank is between 1 and 3%. We've seen inflation in Israel lower than 3% for a couple of months now. So that's one thing about monetary policy. But to talk a little bit about the high tech, sure, that's something that we are looking at, but also the data from the last quarter is really, really optimistic. We see high tech investments go up significantly, even higher than world trend. The thing there is that if we saw another change that we saw an increase in investments by less investors that we have seen before. It's less companies investing, but more money. So that's something we need to look for. But the last quarter was actually very, very good. We hope that it will continue, but we're trying to work on that. And we see that also as a very big driver to our economy. So it's something that we're looking on and trying to see what we can do there. But again, the actual data of the last quarter are very good.
So let's stay on investment for a minute. I think, if I'm an investor, there's a sense in which I kind of want to know two big things. I want to know, why should I invest in Israel with a 10-year time horizon? And then I want to know, why shouldn't I wait until the current conflict um, uh, is less disruptive? Uh, and however that happens, however that reduction in disruption occurs. Why shouldn't I wait until that happens in order to invest? How do you make the case to investors who are wondering about those two, very kind of high level questions?
First of all, history. Take a look at 10 years back. People, or every 10 years you want to take, how fast and how we improved in 10 years. I think it's unprecedented. We're growing in a very, very fast pace, and in 10 years' time, of course. Again, this is not the first conflict Israel is facing. It's not the first. And when we see the Israel's economy perform this well during conflict, look, we're not talking about it, but we're gonna have positive growth in 2023, 2024, and 2025. And I think, and not only, we're not talking about 0.5%. We finished 2023 with a very bad fourth quarter at 2% growth. We're talking this year about nearly 2%, and next year 5% growth. So I think if you take a look at what happens to the Israeli economy from these conflicts, is that it's just like if you take a look at our stock markets after October 7th and now. You see, the first reaction was stress. People decided to take their money out, but now it's up, and even more than it has been before. So I think people just need to take a look about history and how our economy works. And also, I think Israel is positioned in a very, very good place in all kinds of sectors. If it's food tech, if it's cyber, if it's AI, if it's fintech, Israel is leading a lot in those sectors, and we're very high-tech oriented country. So we're very easy in adapting to new technologies and making the best out of them. And also, I know it's not a popular thing to say, but war actually brings a lot of innovation. And I think what we're going to see now is a surge. We're already seeing some of it, a surge in demand for Israeli defense technologies. We're seeing it now not only in the big companies, if we're talking about the laser technologies that we're working on with the US, but also in drones and a lot of different things we're working on now during this war that will probably create this boom of defense technologies in Israel just after this war ends. So I think that's a very big opportunity for people who want to invest in Israel. And I think when you see the need for this kind of projects in Europe, for example, preparing themselves for their security threats, I think you understand that Israel is going to have a very big part of those solutions.
Tell me about some of the policies that the Israeli government is pursuing in order to get the economy growing and to sustain growth over the next 10 years.
So first of all, there's something that was challenging for us before, but now we're even more focused on it, and that's a lot of investments in infrastructure. A lot. Just the last month, we've issued out new tenders for PPP project, private-public projects, international projects, from billions of shekels worth of projects, mostly mostly it's in the transportation sector. But that's one thing that we're dedicated to, and we're going to invest a lot in, and that's all private sector. We believe in our private sector. The government is the government plays like 30% of GDP in Israel. Most of our growth is from the private sector, of course, as we talked about the high tech. Another thing that we're very dedicated in doing, and we're doing it a lot, and we're trying to do it as much as we can, is lowering regulation, and being more open to foreign products and foreign companies. I think we're seeing it already. There is a very big reform going in now, eliminating a lot of regulation of importing products from Europe and the US. And I know we talked about the change in the composition. We probably have to take a closer look to that after we saw the reaction of some countries to this war. I mentioned Turkey, but we're we're focused on lowering regulation, increasing investments, and hopefully, because we have to keep our financial stability and we have to keep our fiscal responsibility, hopefully we won't need to raise taxes, but if we do, we will. But I don't project that being in on the business side of things, probably more on the private taxes, let's call it.
And say a little more about some of the kind of fundamental drivers of growth. You know, how do you feel about the outlook for your education and training system? How do you feel about your outlook for workforce growth? How do you feel about the outlook for kind of productivity growth more broadly?
So a lot of our productivity challenges in the workforce has to do with insufficient infrastructure, because we're a new country, because we're only 76 years old, only. And we started this country without subways, without roads, and we're growing very, very fast. So that's something that we truly believe will increase our productivity in the workforce. Another thing, as I talked about, our biggest challenges are two populations in Israel. We have the ultra-Orthodox population, which is mostly the challenges with the men, because the women work more than world average, a lot more. But the men, because of culture differences, don't join the workforce. I think you know that problem also in the US. But we're actually seeing a change in that. Of course, if the change will happen also, if the ultra-Orthodox community will also join the army, which is something that is probably the most significant issue in Israel now, right, is the joining of the ultra-Orthodox community to the army. It's going to change not only the workforce, it's going to change our security levels. So that's another thing that we're working on. We have also the Israeli Arab community. The Israeli Arab community, the difference is that they want to join the workforce. So we have the demand from them, and we are investing a lot, tens of billions of shekels in plans in order to help them join the Israeli high tech, for example, and other places to be more productive. I think those are our biggest challenges, and we're starting to see improvement in the Israeli Arab community. We're hoping to see the improvement in the ultra-Orthodox men community. But all around, Israel's work participation is higher than average, a lot higher than average. We have a problem with productivity. We hope to figure it out with infrastructure.
Terrific. And let me just check another audience question here. So this is a question from Professor Henry Barkey at Lee University. He wants to know about your outlook for tourism. And your outlook for exports and investment flows as they are affected by boycotts and as they are affected by the perception held by many that is negative toward Israel's military response to October 7th. How concerned are you about those things?
Okay, so first of all, tourism is concerning, right? We saw a drop in tourism. The only thing keeping our tourism up is that it's not a good thing, but it happened, is that the communities that we have evacuated from the borders are now staying in hotels. So the actual hotels are in higher capacity than they have ever been. They're nearly full. It's very hard to find a hotel room in Israel now, which is very opposite to the situation where we're having this kind of decline in incoming tourism. So I think that it will be very hard to do before this war ends. But I can tell you that the way this war ends have a very big effect on tourism, because if we'll finish this war stronger, and more safe. And it will be even more safe to be in Israel than it was before, which that's our objective, right? The war in Gaza is in order to prevent Gaza from sending missiles to Israel. So if we can prevent that, then we're safer and we're easier place to attract incoming tourism. That's one. And of course, in the north, the same. We will get the people back to their homes after we make it safe for them to go back home. And if it's safe for them to go back home, it means Israel is safer than it was before. And I think that will attract the tourism. For now, I'm sure that will continue to be a problem, but you have to understand about Israeli tourism, it's not that significant to our GDP. It's less than 2% of our GDP. And as I said, the hotel sector is fuller than it was before. So the effect on the Israeli economy for that is not that great. What we're seeing in foreign investing in Israel, that's also something that has changed before October 7, but now, as the professor said, is changing even more because of the composition of it. I'm sure that what we're going to see is more friendly countries investing in Israel and less not friendly countries investing in Israel. We're seeing that also in the US, right? You have your mechanism of investment screening. I'm just before this Zoom, I was in another Zoom with the Czech government and the US government talking about those kinds of processes between our countries. So I think that's something that was already happening and it probably will happen in the future. But as I said, our high tech, for example, I think it's over 80% American investors, over 80%. So when Turkey says it's not going to invest in Israel or something like that, it doesn't make a lot of difference to the Israeli economy. We're focused on connecting our economy to the US, to the EU, for example. We signed an investment agreement with Japan, and we see that coming very fast in the foreign investments to Israel. We hope to do the same with Canada and other countries, other friendly countries. And I hope those countries we can rely on to continue investing in Israel. So we're not that concerned in that matter. We are concerned because we see world trends and investments, and it came down very hard since COVID, since the interest went up highly. But now, as I said, the last quarter is very, very optimistic. We see a very big change in that matter. I'm sorry if I forgot some part of the question, but I think that's
boycotts.
Boycotts.
Are you worried about boycotts?
As I said, it matters. First of all, it's a concerning trend. It's a concerning trend. I think not only to Israel, but it's a concerning trend, and we have to fight it. Specifically, the boycott we're experiencing now is not that alarming, but the actual trend of it is very concerning, and we hope to see less of it. We're true believers in free trade and global trade, and I hope that we'll be able to prevent that from happening in other countries.
I have a excellent question from a young person here at AEI, Luke Hayes, who's asked, what are ways in which smaller investors in the United States and other countries can invest in Israel rather than large PE firms or investment firms?
Right. That's something you need to understand. For Israel, big investment is, for the US, it's small investment. And I'll explain. As I said, we're a very small economy, and a lot of our companies, our high-tech companies, our startup companies are small. We're not talking about giants. So even if, in that matter, if you believe in some kind of technology, as I said, if it's defense technology, if it's fintech technology, you can invest in those kinds of firms. I think those kinds of startups, they're not even firms yet. And I think that can make a very big change. And also we have our stock market, which is not as big as the US. Again, we're not a big economy, but I think it has a lot of opportunities. If you take a look at the last couple of years and how we reacted and where we're going forward. And if you even compare our high-tech index to the NASDAQ, for example, I think you'll see that it's worth to invest in Israel, even through war, right? We're doing this like the most risky time we see the economy reacting. And as I told you before, our financial stability with a lot of foreign currency reserves, and our current account surplus. So I think we're in a very good place. And I think small and medium investments in the US are not so different from large investors in Israel. So when you're talking about small and medium for Israel, it may be just the right investors to have.
Excellent. Um, you mentioned that countries are using trade as a weapon against Israel. How is your government addressing that?
First of all, again, we're at the conflict, right? Because the countries that actually used trade as a way to fight Israel, let's say the Houthi at the Red Sea, it's most harmful for global trade, not to Israel. And I think the reaction of the US with the UK and others is the right reaction. Because imagine now that anything happened in the world that somebody is not in line with, it'll start disrupting world trade. I think that's not something we can allow. So that's one thing, and I think that the U.S. is we appreciate their decision there. On Turkey, I think it's a kind of different thing. I think for a president to endorse a terror organization, Hamas, have them in meetings after what they did, after they showed the world what they are, I think that's a problem for everybody. I don't think we can normalize it, not even the US. I think that's a problem. And seeing that action from Turkey to Israel, it's something that we need to address. We have different kinds of things we're working on to address that. And it's not something we're going to leave without a reaction. And I think, but again, the reaction here is not only Israeli. I think we have to see also an American statement about that or reaction to it, because I think to have a NATO president, right, is part of NATO, meeting with or endorsing Hamas, the most horrific terror organization, and also using his economy to fight Israel is not something that we can allow, and we're working on reactions to that. But as I said, the actual effect of that on the Israeli economy is not that big.
Let's talk for a minute about the Inflation Reduction Act and the CHIPS Act. These are experiments in industrial policy at a massive scale here in the United States. I've been very critical of the use of industrial policy, in part because of the effect it has on other nations. It creates a permission structure for other nations to relax their subsidy rules and their rules governing, government influencing the composition of industry. It puts stress on international alliances. When the Inflation Reduction Act was signed into law, the president of France, for example, warned that it could fracture the West, in part by launching a global subsidy war. Tell me how does this look from Israel's perspective?
First of all, I completely agree. And this subsidy war that everybody's talking about, Israel is a part of it. We see that in Intel, they wanted to create a new or upgrade their factory in Israel. And they came to the Israeli government that says, if you want us to upgrade our factory here, you need to subsidize us, just like the US is subsidizing, just like the EU now is subsidizing because of the US. And I think that's a very big challenge for us. You saw the costs of war for Israel, and now we have to add on to that subsidies for companies to stay in Israel. It's not that we're not doing it. We'll manage to do it, but I think it's not the smartest way for us to to spend our money now, even especially now. And we see the subsidy for the Intel factory now, it's huge. It's about $3 billion, huge for us. Again, we're in an Israeli scale. And it's something that I don't think the US intended before for that to happen, especially to Israel. Even if it intended to bring in factories from different places, I'm not sure, because Intel is an American company working in Israel. So I'm not sure the intention was to actually create this problem for Israel. In one hand, help us with the war effort, with a supplemental help, and the other hand, create this problem for us that we have to put in a lot of money and subsidies into, which doesn't make a lot of sense to begin with. And I think that wasn't the objective of this initiative. The same with the IRA, the same with the Inflation Reduction Act. We're seeing work positions taking from Israel. Again, I don't think that was the objective of the American government. I think it's in the Israeli and American national security objectives to keep Israel's economy strong. So I don't think it was intended to take work from the Israeli economy. But again, that's part of the effect. And I think that's what we're asking for. And that's my last slide that I show, that just as America is treating, let's say, Mexico and Canada differently on the Inflation Reduction Act, or we saw in the CHIPS Act, they're treating several countries differently than others. I think if the US wants to prevent this kind of negative effect on friendly countries that they are mostly invested in and invested in their economy. And as I said, the Israel's economy stability and strength is part of the US, I think, national interest, national security interest. So in order to prevent that, we have to make some changes in those initiatives. I agree with you that if they weren't in place at all, then we wouldn't have this problem. And as I said, these kinds of initiatives are not intended to, it's not that they did that, it's not Turkey boycotting Israel. It's not something that was intended to influence the Israeli economy. The ones was to produce more chips in the US, and the other was to create more clean energy. It wasn't addressed to Israel, and I hope that we'll see that those intentions also written in those laws in order to prevent that negative effect that we're seeing. We're actually seeing these days in Israel.
Excellent. I think we're coming up here on the end of the hour. Minister Hacker, do you have any concluding remarks you'd like to leave our audience with?
Just thank you very much for having me. I really appreciate it. I think it's very important to speak about Israel's economy, to let everybody know how stable we are, and make everybody understand that even in wartime, Israel's economy is super strong, and we're known to bounce back very, very fast, and we're already starting to see it. So thank you very much for the chance, for the opportunity to explain that and have this conversation. I really appreciate it.
Well, it's our honor to have you here. The relationship between our countries, including the economic relationship, is one of the most important in the world for many, many reasons. And anything that I can do, or my colleagues at the American Enterprise Institute can do to strengthen that relationship, particularly during such a sad, troubling, horrible period in your history, I'm eager for us to do. So thank you for being here today, and thank you for your friendship. Thanks to everyone who is watching this video, and I hope you all have a pleasant day.
Thank you very much.